Good morning. I'm here at the shops in Uptown Waterloo at Chestnut Park Realty's office, and sat across from me is Darryl Watty and Lee Quaile. Good morning. And first off, I'd like to thank both you gentlemen for being with me here this morning. We're going to talk about housing. And Darryl, you are a realtor, and Lee, you are a realtor broker. For our audience, could you just maybe quickly explain the difference between what your roles are here at Chestnut Park?
Sure. Thankfully, my name is Darryl Watty, sales representative with Chestnut Park West here in Waterloo, servicing Waterloo Region and pretty much west out to Stratford, even St. Mary's. Don't go east too much because the prices are even crazier there. What I really specialize in or enjoy doing is lifestyle real estate, roofs over your own head. You're looking to buy, you have a certain sort of lifestyle you want to live. You like biking, whatever, playing in the park, these sort of things, or you like gardening, then that's great, versus the person that just wants to wake up in the morning, not do anything, roll out of bed, take the elevator down, grab a coffee at the local coffee shop and look cool. I can help you out either. So that's what I really specialize in, roofs over heads, all that touchy-feely stuff. Again, really manage my own team and great group of people that I work with, 4 people. But outside of that, the day-to-day operations of a brokerage and all that paperwork and associated filing, I'm not that interested in. That's why I have my team. But that's why I have my buddy Lee Quaile that was smart enough to set up this thing and set the plans in place so I could just sort of plop in and do my job.
Thanks for that, Darryl. My name is Lee Quaile. I'm the broker of record with Chestnut Park West. I guess my role is a little bit different. I sort of oversee the business side of things and help other sales representatives that are working for Chestnut Park. I also do sell as a sales representative myself as well. I do sort of cater more towards the investor, deal a lot with student housing, multifamily investments, or really any type of investment, as we talked a bit about earlier, flipping, any of that stuff. But no, I just working with people, helping people find the real estate that makes, build wealth, or just sort of as a passion project or whatever it may be, just here to sort of help out.
Okay, great. I guess where we can start is 2 years ago. To lead up to where we are today and then where we may be heading, let's take a look at where we were 2 years ago. And it's like, for example, here in the region, we were looking at 20% gains year over year. The real estate market was good. It was considered pretty hot. We had a global pandemic. There was a lot of uncertainty. CHMC comes out and says you can expect an 18% housing decline based off the information we have, and boy, were they wrong. Now, I'm a firm believer in institutional beliefs. I really am. And CHMC is still getting knocked for its 18% price decline, but they were way off the mark. That really didn't happen. We saw a huge run up in the last 2 years in property values, which has really benefited the owner, but has really made it difficult for anyone who wants to enter into this particular market. Do you think we're at a point now where it looks like the effects of what we've gone through in the past 2 years seem to be somewhat plateauing?
Yeah, I'll go ahead. No, I don't see that. We still see there's a couple fundamentals that are really providing or creating the surge that we're seeing right now. The big thing is a lack of inventory. With the pandemic and everything coming into place, people started to rethink how they maybe wanted to live, especially with offices or may not, work from home and all of that stuff. So I feel like the mentality of your homeowners was changing, and people wanted to get a better understanding of how they wanted to live. So with that, not as many people were coming to market with the sale of their houses just because they didn't know what the solution was just yet. So inventory and the lack of inventory is a huge problem that we're seeing here locally. So that's definitely driving prices up. On top of that, we're seeing a lot of people that are moving down the 401 from Toronto, GTA, and coming west towards us. So you combine those two things, more buyers, less sellers, and we all know how that works. So that's really what's catering to the huge surge in prices. The big thing for me, and you had mentioned, is it leveling off or where is it going? We're still seeing a large number of buyers coming to the market, and we still have extremely low inventory. So until that corrects itself, and I mean, it's going to take months before we see the inventory we need, I think, to bring it to a stable market. And personally, I don't think we're going to see it for even longer than that. So until that happens, I think we're going to still see some craziness in the market, at least here locally in the KW.
Okay, and when you talk about craziness, I'm certainly not going to dispute that word, but we talk about this acronym FOMO, fear of missing out. And it's a real thing, and people who are very, very anxious to get into the market, as you say, we see a very low inventory, all these factors come into the decisions that people make with buying real estate. Now, it's interesting because I talked to another realtor friend of mine and said the role of the realtor and broker has changed, okay? Because people still have an expectation, but you guys can't make listings.
Yeah, right.
I mean, you're out there working in the best interest of the buyers and the sellers. Just what has it been like for you guys? Has your roles changed in terms of how this market currently exists?
Oh yeah, I have to polish my crystal ball on a regular basis to try to figure out what that next house is going to sell for. Because normally when you're trying to figure out the value of a house to sort of index what the expectations of that buyer is, you'd look at past sales and you say, if that sold for that and that sold for that, give, take, whatever, then fine, let's just maybe add on a little bit to make sure we're the winning bid. But that hasn't completely flown out the window. I guess a year ago, there was actually no clue what a house was going to sell for. It was, there's a bunch of, old sort of hand ideas that if there's, 8 offers on the table, then you got to go 8% over asking. That was an old little rule that some people might used to use. That doesn't work anymore. So there's definitely the fear of missing out. And also people understand and look around because you don't even have really new home building locally as an option. Like 17 years ago when even before the pandemic started, when there was like the housing contagion, and I went to CBC and chatted about that, they were saying, well, even then everybody from Toronto was running out this way. And that was when we first started seeing double-digit increases, but there was still that new home inventory to take the pressure off. Now the only real new housing start inventory you have are like 1+ dens and high rises for the most part, and families really aren't looking for that. So it's to get ahead of that cusp is where you kind of need to be to buy something, and the fear of missing out and the fear of, if somebody started and have been shopping for homes in the past 3 months, on the low side, the market's gone up 6% in the past 3 months. So, even what they thought that home was going to sell for 500, now it's 530 if you're lucky, and if you actually want to get ahead of it, you got to pay 550 for it. Now that said, sorry folks, don't call me looking for a 550 single detached home. I can run you out to St. Mary's for that, and that's why I keep St. Mary's in my back pocket. But yeah.
Okay. I'm glad you brought that up because I think during the pandemic you saw at least, I don't know, any kind of real estate news only seems to center around 2 cities, Toronto and Vancouver. It seems like that's the only place that real estate matters, whether it's fair or not. But there was this definite flight from, say, vertical living in condos and these places because, this pandemic hit. I want a piece of the earth to feel safe. So I don't want a shared elevator. I don't want a shared hallway. I want this. I want a backyard for my kids. I want to feel safe. And you saw it early. This flight from the major cities, you saw bidding wars erupt in Hamilton and then Grimsby, St. Catharines. It didn't stop until it hit the border in Fort Erie.
Yeah.
Okay, so we're talking bidding wars for people who work in Toronto and Fort Erie. Are people now or at least getting the understanding that vertical living may be an option now versus where it was basically tailoring their expectations? That the single family home may be out of reach for me in the current market unless things change. And I remember being up on top of Mount Trashmore. It's McLennan Park, but I still call it Mount Trashmore. Yeah. I counted 13 tower cranes building condos in the region. I mean, it looks like this region is only going upwards, But are more people open to vertical living these days?
I think they have to be because it comes down to affordability, and if you want to get into the housing market and home ownership, it may be the only option. So I still think that that vertical living, condo living is still relatively new for KW. Obviously, we've had condos here for a long time, but we're seeing a surgence in them. There was that stat floating around in 2019, 2020 that, we had in Kitchener alone, there was $1 billion worth of permits out. So we knew it was all coming online, and we're seeing that now. Just to touch on a comment you made a little bit earlier, but on the vertical living or condo living, we did see a pause in the condo market actually when the pandemic first started, and for the exact reasons you mentioned. People wanted a piece of earth, they wanted a backyard, they wanted that house. But as the pandemic went on and on and on, and we saw the housing prices go up, the condo market started to surge again, and I think the simple reason for that is affordability. People realized that if they were going to get into the market, that's what they had to do, so they honed in on that. And you combine that with the fact that we saw a bunch of new product coming online here locally, which helped as well. So I think that's what's brought the condo market to where it is now, and it's continuing to grow, and I think it's purely just on demand from an affordability standpoint.
And another factor, and I guess, Lee, this question is more directed toward you, but I mean, for people who can't get into the market, they're looking at all the potential reasons why. And one of them is this idea that people are buying up, people from out of town are coming in and buying up houses, single family homes or duplexes strictly for rental purposes. Is that really, is the investor demand that high in the region that it's actually pushing people out of the market?
It definitely has, and it's grown as the pandemics went on as well. We're seeing a lot of investors coming from GTA. It's not even GTA anymore. It's all across Canada and even internationally. We're seeing a lot of money coming in here locally, and it's spread out between student housing, multifamily, single detached condos. They're pretty much buying anything they can get their hands on, and I don't see any signs of that slowing down either. And it's rental markets are sort of gauged by vacancy rates, and we have an extremely low vacancy rate here locally. It's very tough to find good accommodations if you're in the rental market, and people are seeing this from outside of our market, so they're coming in to participate. So not only do you have great appreciation in whatever you're buying, you're seeing great rents too. So somebody's able to not necessarily cash flow a property, but they put themselves in a good financial position as an investor here in KW. So you're seeing a lot more of that.
I'd say there's also a lot of speculative buying done as well in the last remaining new home building areas. Like you have that Freer development, west end of Cambridge, and even those Mattamy releases that are about to happen. Once people find out that their house is available for sale, there's people lining up knowing that these builders can't build out for the next year and a half if they're lucky, and then saying, if I can lock in today's prices, then I'll worry about it. I'll worry about getting my mortgage. I'll worry about everything a year and a half from now. And based upon that, if we would have done that a year and a half from now, your investment would have gone up by about 35-40%, to be honest. And so like a lot of people are just doing that just to sort of lock in their money, and really what they're able to do is just put their down payment on it. And so they're pretty much investing in futures at about 10-15%. Really? And that's happening a lot too. You have people that all of a sudden it's, once something's actually in ownership, then there's a bunch of people selling it at that point in time. And yes, it's speculative. Yes, you better hope interest rates don't fly up a whole bunch. But anybody that has done that, and looking at the numbers over the past 5 years, it's always worked.
Yeah, you're seeing a lot of confidence in the market now. Whereas, I was answering that question when the first year of the pandemic, when is it going to crash? Is it going to crash? What's going to happen? I haven't heard that question now in probably 3 or 4 months. So I think just buyer confidence in the market is back for what the future holds. So I think that alone is pushing things as well. So obviously this can't continue forever, but I can tell you right now that there's no signs of it slowing down.
I'm glad you mentioned interest rates, because I think that they really couldn't get much lower than what they did during the pandemic. And kind of a year in, these were some of the numbers that I took a look at. And these are reputable lenders. These aren't lenders of last resort. HSBC 1-year variable, 0.99. BMO 5-year fixed, 199. HSBC 10-year fixed, 2.74. The big banks had a 10-year fixed at 2.89. And Tangerine even bettered them at 2.59 for a 10-year fixed. I don't think those interest rates are coming back. Okay, I think they were kind of an anomaly to the pandemic. But it also raised a question with me when I looked at this. Why do we have a stress test when I can lock in at 2.49 for 10 years? Like, why does that even exist? It just doesn't make sense to me. Why do I need to prove I can carry at 4% when I'm locked in at 2.49 over 10?
Well, the quick answer is not everyone locks in.
That's right.
So they're just trying to protect the homeowner on that side of things. I mean, yes, interest rates are at all-time lows. We talked already about inventory and how that affects the market. Well, interest rates obviously have a huge effect on the market too, and that was sort of the second factor that I was referring to when I was talking a bit earlier. They can't go down, so they're eventually going to go up. It just can the Canadian economy as a whole, outside of housing necessarily, support higher interest rates? And there's a bunch of differing opinions. I mean, my opinion is we're definitely going to see them go up. I don't think we're going to see anything before, mid to late 2022. But there are definitely going to be at least a couple rate hikes, I think, as long as Canada as a whole performs decently well over the next 6 to 8 months. I definitely think we're going to see some upward pressure on rates. But we can support it. Like, the one good thing about this stress test, I'm not going to talk about the stress test, but one good thing about it is they would have to go up. I think most people are being tested right now at, somewhere between 5.7 and 5.99 or something like that. So interest rates would have to skyrocket in order for people to default if everything remained the same in today's market. So that's obviously somewhat reassuring, but I do think there is going to be an increase in rates, towards the mid to late 2022.
So one thing I just want to mention on that, because this becomes sort of like that, parkside chat or whatever, because really nobody's still hanging out at a whole bunch. But everybody's like, I'm going to wait till interest rates go up. When we're sitting at 32.9% year over year, October over October, interest rates have to go up a bunch to cause the price to go down. Like, we're talking 80s interest rates for that to happen. Like, right now, we're even talking about a little interest rate might stop the parabolic curve of pricing, but prices are still going up even with an interest rate hike, because there is still no inventory. There is still a lot of demand. And I'm just going to speak locally. And really, from an economy standpoint here in Waterloo Region, gosh, we're blessed. So it's a great place to place money, and interest rates could still go up to 4%. I think my gut would be 4% to 4.5% would cause prices to go down. And it's not that's just gonna, if it hikes up to that overnight, fine, people get shocked. But like, it still takes a long way to go. And then even if interest rates go up a little bit, those people that, unless you bought within the past year, you're still up 30 points, right? So all of a sudden now you can refinance down to 80-20 and you can still float. So that's the one thing I just want to make clear. Somebody's going to, I'm going to wait for interest rates to go up. Well, by then, it'll be a blink of an eye and the market's still up 10-15%, right?
If interest rates go up slowly, I just add one point here, which they usually do. It's not usually a shock where they just jump it up 2 points or whatever. If they go up gradually, the market will take that in. I don't think it's going to have a major effect on it.
No.
The market will absorb it and things will adjust slightly, but not to the extent that people are, maybe thinking doomsday-wise. So I do think that slight increases are not a bad thing for the market. As I said, it will be absorbed. I don't think it'll have a major impact, but it's definitely something that's coming.
We keep hearing about this, and this, I guess, is the remnants of 2007, 2008 in the United States, the housing crash. I'm no expert on this subject, of real estate. That's why I'm talking with you gentlemen here today. A crash is bad for everyone. Okay, so let's just get that right out of our head, even for people who are looking to get into the market. Okay, a crash really is not going to benefit everyone, because if anything improves, the stock market's going to go down, incomes. There's job loss. There's huge ripple effects of a housing crash. So, I guess for me, being what the central bank is, there is a trust factor that any increases will have to balance the effects, But yeah, understanding that they will go up, but also maybe just trust in the fact that, the people who are raising them don't want a mess on their hands, because that doesn't benefit anybody.
Well, they still want to get paid out, and they still want their interest. So if people can't pay, you get nothing.
Yeah.
But you get a house to try to offload like Zillow's trying to do. That's a different topic.
Banks aren't in the business of selling real estate, and I don't think they want to be either. So it's in everybody's, it's in everybody's best interest to make sure that we're not causing anything crazy to the market. And nor do I think the Canadian banking world can be compared to the U.S. banking world. They're vastly different, and I feel that we're at an advantage here in Canada just by the practices that are in place from a governing standpoint. So I think we're well protected. I think the all this talk about a crash and stuff like that, it's going to take something absolutely major and uncontrollable to slow this down at this point.
We talked about the investor kind of effect in the region, and that must cause some animus from people who live here who are trying to get into the market of money coming from out of town. And there was always the belief, or at least there was before the pandemic, that you could, if you're willing to drive, you could live outside the region, where you could get a good place. And from what I was told, it was kind of like Listowel was kind of the cutoff of the Waterloo influence. But work from home just blew that completely apart. You can, if you can work anywhere, you can live anywhere. And, you had, I think I heard that Owen Sound became like the hot place to live. And it was really, really upsetting the locals as out-of-towners came in and inflated these markets. Now, I'd say to that if you're working in Toronto and are working, or your job is in Toronto and you're working in Owen Sound, you better make assurances that you're not returning to the office.
Yeah.
But I guess I'm in a position too where I'm slowly starting to migrate back into the office. Are you seeing that effect too of people who, say, from Toronto or other major cities who moved to Kitchener-Waterloo Region because they could, are now getting called back? Or is there any is this having any effect at all?
Yeah, so I'm seeing that, and it seems to be like a phased in process, because for a while there they were saying nobody's coming back to the office. We're not even doing it. Like Shopify saying nobody's coming back to the office. And actually at Shopify, they're still somewhat believing that, but I still think that that's about to sort of phase back. Even it's almost still switching back to maybe it's a 2-day a week or a 3-day a week. Nothing that's really necessitated a change, because I've had people that are moving out west or up north a little bit, or even Mount Forest, let's say, which is a little bit longer. But that was also somebody through the pandemic that says, the people that had the apartment buildings wanted a townhouse with a yard. The people with the townhouse with a yard want at least a semi to give, I don't want people on both sides of me. And the people with the semi give me my own house, and then other people want 70-yard frontage. 70-foot frontage, and those people with 70-foot frontage wanted an acre. People with an acre wanted acres and a river, right? So that moved out, but it seems to be like a phase back in. People realize they can still work from home, so not everything has to be done at the office. I'm sure, I don't run that sort of office. I'm sure there's some managers that would love that accountability of seeing people in the seats at all times, but also when you factor in travel, that's also one of the considerations when somebody's moving out, is like, how are you sure you're going to have to stay? No, might have to come back once, twice a week. Well, once, twice a week, an hour drive, that's only 4 hours that you're spent driving, gas in the car, these sort of things. If it was a daily thing, that was one of the things when I started in this business, the thought was, let's go get a cheap house in Listowel. Well, once you started doing the cost of gas, every now with interest rates lower, with every $4.50 extra you spend a month on gas, recurring gas, lunches out, whatever, that's $1,000 worth of mortgage you'd be paying down. So you factor that in versus that drive to Listowel day in, day out. It's no cheaper really from a cost perspective and a cash outlay perspective than just working in town. And also, you don't make money off the investment of fuel in your car. You can make some money off the investment on a mortgage, right?
And there's the depreciation of your vehicle as well.
And your time, and when your spouse is mad at you for not mowing the lawn or washing the dishes
Yeah.
because you're spending an extra 10 hours on the road every week. Well, it's funny, that's a lot of stress, right? So, fine, take the smaller house in Mississauga if you need to.
And just to comment on your comment about Owen Sound and how investors or people are looking to move in there due to the pandemic and the work from home. This isn't a new concept. I mean, the work from home, yes, based on the pandemic. But if you look at small towns, there's always been something that has drawn investors there, if there is something. For example, industry. Woodstock, when they got the Toyota plant, investors flock there. Any small city or town that opens university, or Stratford, when a satellite university came there, investors went there. When Waterloo went there, when Laurier went to Brantford, investors went to Brantford. So this is a concept that's been happening for years. People just haven't taken notice to it because it's not all over the news, right? Like a pandemic and the whole work from home thing. So I think it's something that we've been dealing with for years and years and years, and now people are just paying more attention to it. But it's always been in the background.
Yeah, and sorry, I'm going to touch on that too. And then if people are able to work from home, then actually lifestyle even takes a bigger sort of part in it. Like if you can work from home, and you want to ski all the time, why live here and go, try to get some speed at Chicopee? Why not get a place closer to Collingwood if it's more expensive, or close to wherever else? If you like, biking, kayaking, or whatever, that gives you your opportunity to have that lifestyle that you want to live if you can work from anywhere, right? If you like that quaint shops or whatever, then hey, Stratford's a great option. And plus, the cooler place you live, the better chance you're going to have friends want to come and visit you, right? So it's not a new concept, but it comes down to lifestyle, comes down to amount of time, and not just the dollar, though, because again, the dollar offset with fuel, offset with, you live out in Listowel and your kid becomes high-level hockey. Well, Listowel still has good hockey, but the point I'm making is you're still going to be driving back and forth. Like there'll be people that were looking for cheap houses that moved out to Baden 8 years ago, right? But then their kids involved in dance. So they work in town, drive back to Baden, pick up the kids from school, quick grab a sandwich, run back to town for dance, go back home that same night, fall asleep exhausted, rinse, repeat. And all of a sudden the fun leaves the building. So it is a little bit of a long-term luck, not just the work, but the lifestyle that you're playing into, to actually have a happy home, because every time you sell, a guy like Lee and I cost you about 5%, plus land transfer tax and moving expenses.
There's a couple of interesting, crazy stories that I heard early in the pandemic. One was a gentleman who posted a bedroom apartment in Huntsville for $1,000 a month. And it was literally just as the work from home thing started. And to his surprise, there was a bidding war on it, and he ended up getting north of $2,000 a month.
Wow.
For a basement apartment in Huntsville. And you know what? I've been to Huntsville. It's very nice, but it's a lot of winter.
Yeah.
And if you don't like winter, I mean, you might as well be in Siberia. Let's face it. I mean, if snowmobiling, skidoo, or skiing, skating is your thing, you've hit it. But boy, that can be a consideration.
$2,000 a month, man. Find a B lender and a realtor. You can get yourself your own place, but that's fine.
We're really kind of focusing here on the buyers. I'm just going to focus on that for another bit before we kind of switch to sellers and where they are in this market and what opportunities are for them, and ask you gentlemen too, like what's kind of the common mindset of a seller right now. But I heard of this concept, and Lee, you're a broker. I mean, maybe, and I'm sure Darryl can speak to it too. This concept of expansion offers.
Escalating offers?
Of where my offer isn't a solid number. It's basically 10% higher than the highest bid place. So I don't even know what the cost is going to be. So how do I then go to a lending institution and say, hey, I need X amount of money when I don't even know what X amount of money is?
Mm-hmm. You want to start on that?
I can start on it. I mean, luckily here in the KW region, we don't see nearly, or Waterloo
We've kind
region.
of tried to hold
It's-
that at bay 'cause
yeah,
ugly.
it's not something we see much at all. Personally, overseeing every deal here in the office, we've avoided it completely during the pandemic, which is good because I obviously I'm not a fan of that. I think it's ridiculous. I think the whole concept of it is ridiculous. I mean, I'm a firm believer that people have to decide on a number for a property, a number they feel comfortable with, a number they can afford, a number that makes sense. There's got to be reasoning behind it. I think just throwing a blind 10% over the next highest offer, I think it's absolutely ridiculous. And I'm glad we don't see that here locally.
Yeah, and Darryl, if I could just speak to that, it's not. I mean, it's a very shady practice, but I mean, it is something. I mean, I'm the last person who is going to tell people what to do with their money or how to make an offer. But the people who go to a legitimate, but a more reputable kind of firm like yours are then competing against these people, and that's where the problem is. It's not that I'm doing anything wrong, is that somebody else is at that point where they're throwing so much caution to the wind.
Right. Well, so I think we're talking about the escalating offer is the term. So yeah, if the buyer agrees to pay 5% more than the highest offer, but also with that you can on those offers, and again, it's kind of been so there you go. You can get mad at us realtors, but we're somewhat keeping it in check quietly here by really not pushing these numbers, these sort of offers, because it gets crazy quick. You can put an escalating offer up to a max amount too, okay? But you can also have other realtors that I know, some realtors that would, if they had an escalating offer in front of them, can still milk it and milk somebody else against it because that offer keeps escalating. So you keep working and working, and it does get to a point where you can't get financing. But I think the other difference is most people that I'd assume a lot of people that are getting into escalating, it's not their first home, they have another home. And I think that's where you look at it, the average sale price of a single detached home, $997,000 is where we're at right now. How can somebody pay that? Well, if they bought something in 2009 for $250,000, it's worth about $8 now if they've kept it up to date. And so their mortgage is down to whatever, $75,000, if that. Okay, so now they're sitting on really $600,000 down. So the bank is really looking for 20% down on the value. They'll appraise it up. Let's say you escalate offer up to 1.3. The value of the home is 1.1, right? They still have $600,000+ down, and plus extra. Well, fine, they use $400 for the down payment, but they have $200 to cover the shortfall on appraisal. You can still get the financing through on these, a lot of cases. Now you're going to be paying through your nose forever and ever, amen. But I think it's also, a house only has a value up to a certain amount, right? Because at a certain point in time, you can build it yourself, you can buy something else and crush it, unless it's an absolute piece of art or like I must have it, I absolutely must have it, then that's fine. But fear of missing out only takes you so high in evaluation, right?
Yeah, and I think this is something that you'll see less and less of moving forward, especially if we do get, higher interest rates or more inventory. I think it was just, it was a practice that was being used by some when the market was, when there was so much unknown. I think there's a lot more understanding of what's going on right now. So I feel like you're seeing less of it.
Yeah.
Personally, as I said, I haven't seen it in a long time. I've only seen a couple examples of it in my 15-year career, and they've both been, right at the beginning of the pandemic or just a little bit into it. But now that I think that there's more comfort with everything that's going on and more understanding, I think you're going to see less and less of
There's
it.
a few more comparables in this new market too. When, before that we were only seeing maybe 13, 15% increases year over year only. That was amazing, right? But and then all of a sudden it just started going really crazy. And you started going up you started seeing 23, 25%. And then people are doing their calculations saying, I'm looking at a $700,000 home. And if it's going up at that sort of, that means the price of the home is going up by $500 a day. I better buy it yesterday. And then that's the fear of missing out that caused it to go. But now there's enough, comparable sales that came in, there's at least some sort of a relevant index you have from a valuation perspective. Otherwise,
baseline.
Otherwise, hey, if it goes past this, like, okay, fine, spend an extra $75,000 if you really love it and has a pool. Well, actually, if it has a pool, spend $150, but whatever. Up to that amount, you know what? There's going to be another house coming around the corner that's going to do the same sort of thing for you.
So we're still on the kind of topic of buyers and, like I say, the things that they're facing currently in the market, and understandable frustration and decisions that they make. One of the things that has come to light, I think it was CIBC who released this report on what they call the bank of mom and dad, about parents funding down payments. This is a report by BMO. And in Toronto, the average parental help is $130,000. In Vancouver, it's $180,000. If it's an offspring looking to move up in the market, the average help from parents is $200,000, and in Vancouver, it's a staggering $340,000. Now, the reason I'm mentioning this is not that I see anything wrong with parents giving kids cash. That's their business. They worked for it. We can't go interfering in how people spend their money. But from a buyer's perspective, if you're competing against this has to be enormously, enormously frustrating, because not everyone has these kind of parents. Are you seeing that in the region at all?
I've seen it in the region. I started seeing it heavily in 2017, because before 2017, if you worked hard and you had a spouse that worked hard, then you almost were able to fulfill that natural right of having a double car garage and a white picket fence and maybe even some granite. So, that was available to you and you could do it yourself, and it was sort of a pride thing that I bought it myself and so forth. But when you actually, it's combined, like when you almost, the money and the equity that the parents have, unless they're sort of day traders, is going to go to the kids anyways at some point in time, right? So if you see your kids spending, again, along with the prices, rents have been shooting up through the roof too. So if you see your kids spending crazy amounts of money on rent, it makes sense as a parent. Well, you're going to get the money anyways. I've got it in this GIC making me 2 point nothing. Why don't I just give it to you? Because, the market is going to go up by at least 15% next year, and it's going to go to you anyways. So yes, if you don't have it, you don't have it, but life isn't fair, right?
That's what I was going to say. I don't want to sound cynical, but life isn't fair. If this is your biggest worry about, losing out a house to somebody whose parents gave them $200,000, I'd say your life's pretty good. So I think you just got to suck it up, move on to the next one. That's my attitude.
And if you see it happening over and over again, to me, it's a conversation with the parents. And, some parents might say, oh, I had it this hard, that hard, whatever. You bought your house for $25,000. Not quite, but you know what I mean? It's like the cost versus income. The last study I saw was 2019 or something like that, where it's just, to buy a house in Toronto, you can't do it with your income. You just cannot. So it has to be a transfer of wealth to do it. But again, that wealth is going to transfer regardless to the kid anyways. So sort of do it now, and to say, well, your mommy's and daddy have more money than my mommy and daddy. Well, I grew up with kids that had way more money than my parents did. So be it. But it's whatever.
It's life.
That's where I decided to work. It's going to happen
regardless. It doesn't matter what's going on with the market. It's going to happen in a down market. It's going to happen in an up market. Right. It's there.
So don't think I don't empathize, folks. Okay, I get it.
I'm sticking with suck it up.
Yeah. Like I say, and because, let's face it, like I say, I don't want to get into a political discussion here, but whenever things don't come in people's favor, the first place they look at is the government. Well, the government has to fix this, and I'm not going to mention the province, but, it was a couple of years ago, they went wholesale on taxes. They said increased property tax. They had a foreign landowners tax. They had an out-of-province tax. They brought in a vacancy tax. And guess what? Affordability went the other way. Okay, so if taxation is the answer to affordability, okay, it can't be trial and error. as some places have tried, in my humble opinion. Like it has to be very, very thought out. It just can't be, what I saw is kind of random inventions or accelerations of existing taxation. Like just,
Yeah.
And as a homeowner, you have to be cautious of taxation. I mean, it is, property taxes typically move one way, so.
No, I understand where you're going with it. And I mean, I'm not one here I don't know what the solution is from a governing policy standpoint. But when in doubt, I just always go back to my old economic studies of supply and demand. And I think first and foremost, that's going to dictate price more than anything else, and affordability and all of that. I mean, if we have a ton of supply, and the demand's not there, well, hey, what are prices going to do? They're going to come down. If we don't have any supply and we have a ton of demand, well, what's going to happen? Prices are going to go up. I mean, it's not as easy as the government just saying, let's do this or that. I don't think there is an easy solution. I think it's either interest rates or inventory. And both are going to take, months, if not years to have any effect, in my opinion. So yeah, I mean, there's a bunch of examples of government intervention that have not worked, and I'm not going to, come out and list them all. But and I don't envy their position, because I don't think there's a simple answer to this, and I think it's something that it needs to be studied and a plan in place. But I just don't think there's anything on the horizon that'll have an effect that they want to see happen.
Yeah, it's simple sort of thing. Policy, obviously, on a local level could change a little bit. My one little gripe that I have locally is, if you're talking about people sort of going into the, moving into the sky, if you will. Right now, the inventory levels that we have of 2+ bedrooms in town is horrific. And for that reason, I think part of it is, and Lee can touch on this, is the way they charge out the developmental charges. They charge it per bedroom, right? Which to me is ridiculous. So you have 1+ dens, 1+ dens, 1+ dens, 1+ dens, 1+ dens, 1-bedroom studios. That's all you have, because then the builder doesn't have to pay an extra developmental charge for that extra bedroom. Well, that doesn't relieve any pressure for families at all. And then there becomes an absolute sort of backlog. It doesn't even relieve pressure for downsizers, because downsizers they're not going to move into a 1+ den. They're going to move into a 2+. And there's next to none of these being built right now, because the builders don't want to do it. And also that the builders to build need to be 40% sold before they can really start building. Is that the number still, 40%?
It depends on the situation, but yeah, that's a rough number. I think you're going to need to see more incentives thrown towards developers in order to get push for that.
But to get 2 and 3 bedrooms,
well, land's at a
help.
premium right now.
True.
You need, obviously, if you're going to build 2 or 3 2+ bedrooms, you need a larger footprint.
Yep.
Unit size, and they're all about let's get as many units. It's about the bottom line.
It truly is. But if the DCs were charged per square foot, as opposed to per bedroom, then it would open up at least a few more, I think, 2 or 3
For sure.
bedrooms.
It's going to take a little bit more than that, though. There's going to have to be some incentivision, I don't even know if that's a word, but they'll have to be incentivized in order to go down that path.
Which is true. But if that happens, the thing is, if we can't get more inventory, you need to get relieves the pressure. Either you build more houses, or the people that are in the big houses leave them, right? So that can happen 2 ways. Either they move out or they get carried out.
I'm glad you brought up that point, because I have a parent, not in this province. She is not going into a nursing home. Mm-hmm. This is my home. This is what we built. This is where I raised my family, and this is where I'm going to die. And given the almost national tragedy of what's happened over the pandemic at nursing homes, mm-hmm. The will to stay in your home now must have increased even more, considering that horrible thing that had happened. So I guess I'll pose it as a proper question. Is the inventory there among, say, senior owners, but they're just not willing to move into vertical living, or there's high levels of reluctance, and whatever that reluctance may be, that's their business, But would you think that, there's a lot of inventory, it's just got to get into selling mode?
Yeah, well, they have to have a place to live. So anytime anybody's looking to sell a house, I always ask, where are you going to go, right? being that realtor that makes people homeless just isn't a good vibe, right? It's a bad hashtag. Don't do any of it. So they need to figure out where they're going. And unless they can, choose where they want to go, like to me, one of my favorite places in town is flat out barrel yards if you're downsizing, right? As long as you're comfortable being in an apartment building, comfortable getting back on that elevator, right? And closer confines. If you're not comfortable with that, then obviously you're just staying in your house, right? It doesn't even make sense to sort of move because property values are increasing. But the other option is fine, downsize into a condo. But again, it's tough for these folks to move into a 1+ den. So it's just, everybody's sort of locked in. If you can move into that condo, a couple big wins for some of my clients is before they can't take the stairs anymore, and considering how much equity they still have, and ideally before they retire so they can still get a mortgage, take some equity out, buy the property you plan on downsizing into, and rent it. Rent it, rent it, rent it, rent it, rent it, and then the moment the stairs become too hard, serve them the 60 days notice, you can move into that property, and then you can sell your home without having to do it all in one fell swoop, or sell first without knowing where to go. Because that's where a lot of people that's where it gets really scary for these folks, especially if they don't have income coming in, is I can't buy anywhere yet, right? I can't buy anywhere yet because I don't have money. Well, I don't want to sell because I don't know where I'm going to go. So that becomes a tough position. So if you want to rent, then fine, barrel yards is a great place too. If you want to rent from somebody else that owns a condo, that's an option for you as well. But the problem with that is if somebody else owns that condo, at any time they can serve you 60 days notice, you get kicked out and you have to get back in at sort of standard rates.
Yeah, I definitely think that there's more, senior homeowners that are going to stay or find a way, whether it's, get some assistance or something within the house, but staying there. I definitely think there is a bunch of inventory being held up by that. I think that's something that's actually was changing even before the pandemic. I feel like people were staying in their homes longer and longer, just for comfort of living. It's something that's, I think that number is going to continue to grow. And unfortunately there's nothing you can really do, right? It just comes down to the fact that, if they feel comfortable there and they've figured out a way to make it work, then they're going to try and go through every possible last resort just to stay comfortable within their home. But eventually, sometimes there's really no choice, right? But yeah, it's definitely a category that is growing for sure.
Lee, when I talk to people, and this is something that I only found out recently, you heard about a lot of properties that go over offering. So if a house is listed at $700 and it sells for $850, that in order to secure the proper financing, there has to be an assessment done on the property, and then the mortgage is based off the assessed value, not the value you actually paid. So then you have to find supplement funding to make up the difference. Is that true, or am I completely wrong?
No, that's bang on. I think you explained it quite well. You have to keep in mind when we talk about overbidding or paying above asking, that a strategy that's used amongst realtors now, especially since the pandemic's come on, and even before the pandemic, is a strategy where they price the property extremely low, like under market value. So it's very tough from an outsider or home buyer or just the public that loves searching realtor.ca to keep track of what's going on, because they're being misled with the original asking price. So for example, that property that you just talked about that's listed at $699 that sells for $850, it probably should have been listed at, $799 or $825, and it sells for $850. Now that's not every example. There are some that sell well above what they probably should. And in that case, as you alluded to, if that house is only worth $8, the appraiser comes through and says it's worth $8. Well, the bank, if under the circumstances the buyer is willing to lend up to 80%, then the buyer is responsible for the 20% of the $800,000 plus an additional $50,000 for the extra that they've paid over perceived market value. So yeah, that is something we run into. I've seen a fair bit of it since even before the pandemic. It's something that's been happening since the market's been in a multiple bid scenario, or multiple offer scenario, however you want to classify it. Since we've seen that, we've definitely run into a few instances where this is the case. But that's usually a conversation that the realtor has with their client before making that offer, because it's always a risk, right? We don't know what somebody's going to appraise it at, what a bank's going to appraise it at. We can come up with a pretty good idea, and generally a fair ballpark, but it's always a risk. So it's important on the realtor to have that conversation with their buyers and just prep them for that scenario if they see it happening in this case.
Yeah. And I think it's getting a little bit trickier right now, though, too, because the average sale price of a single detached is $997,000. So if a house is sold for under $1 million, right, then CMHC rules apply. So you might have fine 20% down, and that was your plan, but in the end, okay, it appraises out a little bit short, so you got to keep some of that cash back. You pay a little bit of a CMHC charge, and then you go down to a 10% down, as long as you're able to pay it. Right? So you just take that cash to the other side, you pay a little bit of interest, but again, average, the price of your home is going up by $500 a day. You're still ahead. It's better than waiting for another 2 months, right? So that's covering it, but as the prices go over $1 million, now everything has to be 20% down. You have to have that extra money to cover, but a lot of those people tend to be, there are some first-time home buyers that are at $1 million now, but those other people are move-up buyers that they are sitting on a bunch of extra equity from the sale of their home, so they can pay the 20% plus also cover off the differential. So it's just that conversation before you put in that offer. That's why you call Chestnut Park.
Okay. And I believe, Lee, you have to leave soon?
I do have to run, yes.
Okay. Well, I'm not going to hold you up. I've taken enough of your time today, but we really, really appreciate you sitting down and talking with us.
No, thanks for the invite, and it's always happy to talk real estate.
Okay. And I always willing to talk to something I enjoy. So we'll finish the conversation with Darryl, and once again, Lee, really appreciate your time today.
Thanks a lot. Have a great day.
Thank you. Darryl, look, we focused a lot about people buying into this market, and the fear and frustration, the forces, the pressures, the unfairness, whatever they want to do. But you did touch on a very important point. There's also the sellers who are say, you know what, I'm sitting on a pile of untaxed equity here. You know, this is a real windfall. But then you've got to enter back into the market, you know, and you say, well, you know what, I'll just move out of town. And as we've shown, that work from home has knocked that concept out of that concept is gone. So I guess there's two things with people who are selling. Either they're trying to move up or they're trying to move down.
Right.
Now move down seems somewhat attainable, you know, pulling the equity out, adjusting the size of the home, probably paying a bit more than they wanted to, but still they're going to be sitting on some cash afterwards. But for those who want to move up,
Yeah.
how difficult is it currently in this market, especially in Waterloo Region?
So moving up is, I'm actually going to flip that. I'd almost say the moving down's the tougher part.
Really?
Yeah. Because again, it's the moving up is tough, but the thing is you're going to buy something and then you have a less expensive asset that you need to sell. So there's a lot less sort of risk involved in that mindset, because fine, you have to buy something that's 1.3 million, but then if you're selling something that's 750, there's such a massive market for that sort of home that you will sell it. So it comes down to timing for that one. So you have two choices: you either buy first or you sell first. Okay. And that just normally works to the way people are built, I guess you could say. So you can buy first. And for instance, when the market's increasing, you want to buy first and almost have as long of a closing date, a move-in date as possible. And then you want to almost wait as long as you can to sell yours. It's kind of like the person that bought the new home a year and a half ago, wasn't able to sell it till 3 months ago, and they actually ended up selling their house for more than that bigger new home that they paid for because the market's flying so fast. Now with that, there's risk. And there's some people that are built for that, and there's some people that aren't built for that. I know many other people that really, want the bird in the hand. It's scary for them to go and buy a house first before they've sold their house because all of a sudden they just open up their phone and they say Bank of Canada announces an interest rate hike, and they immediately start to think the sky's falling, and now they're freaking out. So there were the people that, for instance, built new or bought new, and then the pandemic hit, and then CMHC says that the market's going to crash, and then they're freaking out. But luckily, it was still too early for them to sell their home anyways. A couple sleepless months, and then the market started firing, and they're laughing at the end of it. So moving up, what I suggest to people when you're moving up is, I think the safest way to do it is first get your home ready for sale. So meaning what I call is a weekend turn. So bring the stager through, do the necessary fixes that you're thinking of doing, and then it comes down to once you buy that house that you want, then what ends up happening is that next weekend, you do final cleanup on the house and you have it listed. So then you end up selling in the exact same market as you bought in, and so that mitigates your concern, okay? When you're looking at downsizing, again, there's number one thing, hopefully you're still working, okay? Otherwise, you need to almost sell first because you won't be able to get financing for that next house. Even if you reverse mortgage your house, it becomes a little bit trickier. And classically, those folks are, I'd say, they're not into the interesting sort of forms of financing, I guess you could say. They're sitting on cash this whole time, never had a mortgage, love the fact that they haven't had a mortgage for 15 years. So when you're downsizing, it's first, how do you finance the move? Number one, talk to your bank. There are ways to do it. You just have to figure that out. But the other thing is you're buying down into an actual, a far more competitive market. So you're trying to buy into a more competitive market. You haven't seen firsthand how crazy the bids are on your house. So you can sell first if you want to, and that's probably the best way to let you know how aggressive buyers are. So once you sell your house, you realize, wow, they paid a lot more over what I thought it was going to sell for, so I need to really do the same when I'm buying my house, right? So that's where it gets a little bit trickier in that regard. But also, if you're going to sell first before you buy, then it's also a lot of faith in the market that you will find that house, unless you have the option of moving into the kid's basement. Now it's mom and dad moving into the kid's basement for the time being, but that's a little bit of a swallow in pride. But also the option is for the people that are a little bit better off, maybe they move to the cottage if that's an option. Some folks put their stuff in the storage. They used to put their stuff in the storage, and then they go do a trip of the world or something like that if you want to. But it's the planning. And I would always say, if you're looking to buy first before selling, have your house in next sort of week ready condition so you can sell in the same market. That way you're not sort of at risk to market forces.
Great way to cover that. I guess, given how much time I've taken from you today, there's just two more areas I'd like
Oddly enough, I love this. Go ahead.
quickly cover with you. It's something I know. I wish I could remember the name of them, but they were kind of spawned from this shared equity kind of mindset. The government has it. I'm going to give you an example of Langford, BC. I don't know if you heard about that one. It's the mayor has taken out a program. It's called Attainable Home Ownership Program. It hands 75% of the funds required to buy real estate using 20-time leverage. So basically, the city is funding the down payments.
Yeah.
Okay. And I've heard of these too. Now, this is a municipality, but there are non-traditional mortgages now, kind of this shared equity model where you buy it with someone.
Yes.
And then after 10 years, you have the option to buy it out and stuff. I'm skeptical. I don't know enough, but there's a certain amount of, you're away from traditional mortgage setup, and it's like there has to be a benefit the other way. I'm just wondering what that is. And
yeah, so that was the same sort of thing that came out at around this time last year, where you could almost buy something with the government based upon sort of approved lending criteria, yada, yada, yada. Okay, anytime you bring more money into and open up a new pool of buyers, you want to see the prices increase? They're going to just fly up. What I would almost rather do is, and then it almost has to become across the board too. So if a housing area is sort of crashing, or let's say the prices have gone up so high that all of a sudden we get into a housing lull and the prices are about to go down or whatever, then that's sort of a boost that you would bring into this sort of market and housing economy to make that work. That just would cause a lot more competition. To me, that would cause the prices to go up even higher. And me as a buyer trying to get in, I would rather say I wouldn't want to do that. I would more talk to a buddy or a friend that's in the same position that I'm in, and buy a house together. Like, why not do a co-ownership model? It happens in the States a lot. It happens in Toronto as well. If you're living with somebody that you know, you don't have to go through that whole duplex thing. One of you guys can live in the basement. You can have a shared kitchen, or you can do your sort of separate sort of kitchens. Just make sure it's the fire code. And as long as you're living in it, that's the way to get into the market. Because if everybody at the same level is coming in with the same opportunities, that's just even more competition yet again. And the prices will shoot up. So I'm always looking for the angle. So my angle would be talking to, Rick and Sandy, who was renting next door as well, and they're complaining about the housing market. Well, as long as you don't hate their guts,
and can cohabitate, but still buy a bungalow. Somebody's upstairs, somebody's downstairs. Whether it's a percentage of equity that the person gets more for living the less nice lifestyle in the basement or whatever. To me, that's the angle to get in is the cohabitation, the co-ownership model. It's actually interesting you mentioned that, because I talked to somebody recently who was so frustrated in trying to get into the residential market. They teamed up with a business and they bought a business property that had a storefront
Exactly.
and a place to live upstairs.
Brilliant.
And, she had mentioned that it had a 5-month close, a proper inspection, all the things that, you kind of used to happen in residential real estate. She's discovered it here, and it seems like it's working out great for her. But
it used to have the partnership agreement written.
Yep.
And they're really not that difficult. You can sort of put in the rules of how you want to do it, sort of buyouts after an amount of time or whatever it is, or there's a ton of options there. That to me is the end.
one, I guess 2 more things. We can talk a long
yeah.
time on this subject. And I have a friend who's a builder, and I talked to him about house prices and where they're gone, and he looked at me dead in the eye and he said, "Craig," he said, "house prices are actually right where they are actually correct." So he says, as a builder, if I'm paying $80 for a sheet of plywood and $15 for a stick of 2x4, trust me, I can't build that house for any less than what the current selling price is on an existing one. So actually, he said, build versus buy is actually on the level.
I'd agree with that, and I'd say new home building, and who told me this? New home building is the true depiction of value, especially if there's a little bit more property that's available, because the builders all buy the land for the same amount, and if they can't get enough profit, they don't build. But if they start getting too much profit, there becomes way more builders, right? And it's really that's economy at its finest. That's the way it works. So if you can't make X amount of money, you don't build the property because land doesn't go down in value. You'll just wait and you'll build it out later. So yeah, the prices are. This is economics. This is supply and demand. This is, fine limiting urban sprawl and the 10-year plan for the region. Unless we push past that sort of property line, past Wilmot line, and that's allowable, then prices are going to keep going up, or you jump out to the next town. You jump out to Baden, you jump out to New Hamburg, St. Mary's, Listowel, Atwood, outside of Listowel, because Listowel sprawled, right? So that's just the way it goes, and that's economics at work.
Yeah. One last thing. Like I said, I don't want to take up all your day, Darryl. Something that I've noticed around my neighborhood, coming soon, sign goes up on the lawn. Mm-hmm. The thing doesn't even hit market. The next day sold is on it. Yeah. The Realtor sign's not off the front lawn, and there's a dumpster in the driveway full of flooring and cabinets.
Yeah.
On top of probably spending more than asking.
Yeah.
the first thing that's happening is the expensive renovation. And given the broken supply chain and labor, there's no such thing as a cheap renovation these days, or even, So I just scratch my head, and it's like, that is another cost on top of a cost. So who exactly are these people buying? Are these investors looking to sink money in, maybe, increase the property value and then flip it and sell it? Or is this somebody actually going to live in it?
Sure. So I've worked with a few flippers. Lee himself has been a flipper, and he's done a few flips. Right now, he's like, I'm not playing the flipping game. He's out of that just because of to get people. Right now, to work on a flip is tough. It's the same thing that, again, Zillow's run into now, and that's why their property flipping business that they're, Zillow had a plan by 2024 to purchase over 5,000 homes a month. Just about a week ago, they've realized that their estimates weren't quite working the way they should, and they realized they have to liquidate $2.8 billion worth of property. And they did a study on 650 homes, and 2/3 of them were overvalued. They thought they could get in on this and start flipping out a whole bunch of stuff, but they realized that a lot of people don't want to work, so you can't quite get the people to do the flips. So they're getting out of the flipping business. I think flipping is scary. It's the people that are getting into these sort of, and I guess coming soon is the one thing I want to mention. I think anybody that doesn't hit the market right now is really missing out on a lot of money, right? Because supply and demand will get the prices up. If you have one house and there's not many houses for sale, like last week, we only have 264 active listings. In a balanced market, we'd have 800. Okay, there you go. So definite seller's market. Anytime you do that, you bring it to market, you're going to get more money. So let's assume it even went to the market and it sold for well over asking or even more than expected. The person that's doing the major renovation, it's still going to be cheaper for them to renovate the house than it is for them to build new with $80, $100 pieces of plywood. So you have, especially in your B plus to A plus neighborhoods, if you want to live in that neighborhood, if you're able to, save the foundation, use the first floor, the brick on the first floor, because it's still built to take on an extra story, put on an extra story, bring in an architect so it doesn't look terrible, but put on an extra story and get that house that you want, you're saving a lot of costs rather than just building it from new and crushing an existing dwelling. Because you need to almost do renovations now because there aren't new pieces of land that you can build on. Plus, if you want the location of being able to walk to the golf course downtown or whatever, that's what you're left with. So I think it's just a matter of people figuring out what sort of home they want. Either they crush and waste all that foundation, waste all that everything, and then have to go through the whole tearing process and work with a new builder. But if you build off an existing foundation, you don't have to go through tearing, you just have to go through building code. So you can almost sort of GC that yourself and save a little bit of money in that regard. So it's all about the people that plan a little bit better, that are able to do these things. In the past, I'd say my clients, I at least have about 8 clients per year that do major renovations immediately, and that's part of the plan, that's part of the budget. But you look at it and say, okay, that's going to cost me 1.5 when I'm done, but if I have to pay for it on the market when it's done, it's going to cost me 1.7. Plus, I'll end up with a color of granite that I didn't want anyways. That's what somebody else wanted. So it's just a plan going in, and just with the cost of labor and the cost of building materials, it's cheaper just to buy it and do a whole renovation.
And any renovation, let's face it, is dollar for dollar value. Yeah. So if you do an $80,000 renovation, you are adding $80,000 of value to that home.
Especially if it's a full renovation. Yeah, I'd say, your partial renovation, somebody, has a house that they haven't updated in ever, and they say, well, I'm thinking about selling, I'm going to do the kitchen. I say, okay, I would suggest not, because if you have a nice new kitchen and I take a look at your old bathroom with, violet colored toilets, right? That's just going to say I have to do the bathroom right away. So if you're going to do one thing, you do it all, and it's dollar for dollar money back, but it's more on a grander scale that you would want to do it to get your best returns.
Before we wrap it up, Darryl, just quickly, you've been in the real estate market here in Waterloo Region for a lot of years, seen a lot of things. Right at this moment, November 10th, 2021. Yeah. What would be your advice for sellers?
Advice for sellers? Okay. My advice for sellers is, unless you know where you want to go, I'd probably hold, because this ride isn't stopping. Okay, really, outside of government intervention, it's just, again, it's going to take a huge hike in interest rates to push this to push the prices down. I don't think they're going to even go down. They haven't even cusped yet. So it's going to take a lot to curb this sort of price contagion and price points that we're seeing. If you have the choice to, get an extra property, hate to say it, it's, you are creating to the problem, but, people that are building wealth aren't worried about the problem. They're just getting ahead of the game. And again, don't mean to be as, raw and straightforward as Lee, but these are the things that Lee and I talk about over lunch, right? So if you have the chance to get that investment property, that's fine. If you have the choice to put an income suite in your basement and you're not using it, maybe that's a good idea, because that could very well be of huge value to the next people coming along too. So always plan out what your future is going to be, what you want out of the house. If you want to be there for a long time, that's fine. Maybe talk to the kids just to see if they have any plans of maybe being in that house, because that's a great way to do it too, for just the ownership transfer to go to the children, and you hold the mortgage back there too. So there's a lot of things at hand, but I would say don't sell unless you're really excited about going somewhere, unless you want to live on the water, because we don't have a whole bunch of that here, and you can move out to Nova Scotia, Halifax. People seem to be doing that and real happy, and I get a lot of postcards from my clients that left, and it looks gorgeous. But apparently their winter's not that much fun either, so whatever.
Quick advice for buyers.
If you have a plan of getting into a property, first figure out and try to see yourself 5 years out. I think setting goals in life, period, is a huge start. If you're living day to day, then you're going to be waiting for the next press release. And at that point in time, you're reactive, you're too late. You're just following the herd. So 5-year goal personally, I think would be personally, period, like everything, life, that starts. And if that, you see yourself still in the same town or whatever, or you realize I don't need to be in town, or I'm working on this business, I think goals in life there, and then find your place to live to suit. Because it might even be renting is your game, because you might save up all that money for a startup or whatever great idea you have. You might be able to make more money with that. So there are people that rent that are happier, and as long as it's budgeted. But I would guard against waiting for the next press release to make your decision. Don't just let the wind blow you around. Set a plan, see yourself in the future, and have a realtor to help you get there if it involves real estate. And
you spoke about you wouldn't advise flipping these days, but as someone who would look to buy an investment property in the region, any quick advice you could give that?
Yeah, I think anytime you can have a chance to add some value for yourself, that's great. With investment real estate, and Lee would touch on this as well, you have two choices. And it's sort of almost an either or. Have a chance to get something that's that cash flows. So that means you have 20% down on the property. And then on top of that, the rent that is paid by your tenant will offset your property taxes, your mortgage payment, and then you normally have the tenant paying the utilities. If you can get a property like that cash flows or comes close to cash even, I think you're in a great position, because you're going to have your tenant paying down your principal, okay? And then also you still have that chance to get in on this 15 to 30% increase. Now, if you buy a property that's straight rental, that's a duplex up and down, those properties, the future value is tied into the amount of income that it produces. So you're probably not going to get in on that same run of 30% increases year over year on that. You're going to be at maybe 15 or 20 based upon today's market. Based upon the income that's coming in. Your other option is, though, and this is kind of what I prefer in lots of cases, is actually buying a nice home in a nice area, slicking it up with a little bit of paint for the time being, or buying it for a future use that you see for yourself or your family later, and renting it out. And then, unfortunately, on that, what you end up having is a little bit of a cash flow bleed. So let's say you're paying out for mortgage and property taxes, let's just say $2,000 a month, but your rent coming in is $1,750. So every month you're losing $250 cash out of your pocket. However, you're still paying down principal, Okay. And then on a nice house like this, it's going to be a little bit less of a hands-on approach because the person that moves in, it's not going to be a duplex. It's just one person moving into this property. They're going to love it, shovel the driveway, mow the lawn, and they're going to act like it's their own house. Okay. But then in the future, you're going to play along with the market. That's the house that goes up at 32%. So that's a chance for capital appreciation, which is nice because in the end, when you sell it, it's when you have cash flow, that's income, so it's fully taxed. Okay, when you have capital gains are only taxed at 50%. So there's two ways of looking at it. 12 years ago, gosh, I wish I got into the investment real estate back then. Lee did. Lee would get both. He'd get capital appreciation and also cash flow. That's why he owns the brokerage and I don't. So there's a good way to getting into real estate. It's a great idea. Again, it's your goals. Where do you want to be? But don't let the media and the market and the press releases sort of affect your mind state. Have the goal. Where do you see yourself to be? Do you see yourself being a success with real estate? Do you see yourself doing these things? And then get somebody, whether it's Lee or myself, to help you get there.
Thank you so much, Darryl. I've taken up so much of your time today. I really, really appreciate it. We've covered a lot of topics. I certainly hope this is of use to the listener. I'm sure it is. And Darryl, we're sat here, as mentioned at the top, here at the Shops at Waterloo. This is where your office is. How can people get in touch with you if they want to talk about buying or selling a property or even investment with Lee?
Just walk down the Shops at Waterloo. I'm not always here, but there's normally a member of my team that's here, and ask for Darryl Watty. You're also welcome to call the brokerage at 519-804-7200. Look me up on Instagram, Facebook, Darryl Watty or The Watty Way. Email is watty@wattyway.ca. And Lee Quaile, just ask for Lee Quaile and he'll come flying in with a cape.
Darryl, thank you so much.
No problem. My pleasure. Thanks for having for being in. This is always fun to chat about real estate. I love it.
Thanks again.